everybody. Thank you for joining us. My name is Jeff Billingham. I'm the VP of Capital Markets at Chainalysis. It's a really very fancy way of saying I get to work with some of my esteemed industry colleagues to my left, as well as most of our client base. I mean, exchanges, financial institutions, big banks, smaller brokers, you name it. I've worked with them over the course of the past 4.5 years of my time at Chainalysis. So today, we're here to talk about, I think that the name of the placard outside says, so you want to get into custody. The idea behind this is really, I don't know if for those of you who attended Caroline Butler's conference or meeting a little bit earlier, she was talking about how custody is ultimately really about a form of trusting a business to maintain your assets, be that crypto or something else. So, we kind of thought, well, let's bring together a lot of people who have different and very sophisticated perspectives in the crypto world and in the banking world about really what does custody mean and what does it mean to be running a business where clients and customers essentially rely on you and trust you to protect their assets. So that is the lineup we have for today. Before we begin, I'll do a quick introduction, and then I'd love to have you all expound on your experience and what brought you to the cryptocurrency space. I'll start with Neil Chopra to my left at Fireblocks, if you'd love to give us an intro.
Great, appreciate it, and thank you everyone for attending. Neil Chopra, I lead our advisory and solutions team at Fireblocks. So we at Fireblocks are delivering a direct or self-custody wallet infrastructure platform. We'll go into a little more detail about what that means, but servicing a number of different market segments from crypto-native exchanges, brokers, market makers, lending platforms to fintechs and neobanks, traditional banks, asset managers, funds, really anyone looking to get into digital assets and cryptocurrency. I've been with the company about 1.5 years now, joined from Ripple, where I was for about 4 years with a focus on cross-border payments and leveraging digital assets for global liquidity management. And the reason that I kind of came into the crypto and blockchain space is because I spent the first 10 years of my career in corporate treasury, so doing a lot of advisory and consulting for, let's call it the Fortune 1000, really on global FX management, liquidity, payments, and hedging. And so really saw firsthand a lot of the inefficiencies in the traditional markets and how banks and other companies were servicing their core customers, and saw that blockchain and crypto could really help create a lot of efficiencies within traditional markets. And so again, seeing that use case of payments and cross-border payments specifically was very eye-opening to me. And then coming over to Fireblocks and just seeing the wide variety of use cases and applications of the technology across multiple businesses has been really exciting.
Thanks so much, Neil. Alfarida?
Yeah. It's on? Can you hear me?
There we go.
Perfect. So Alfarida Mohammed, I'm the Senior Vice President of Compliance at FTX US. FTX US is a leading cryptocurrency exchange in the US, but we do other things. We have an NFT marketplace. We have a bunch of APIs to power white label crypto solutions. We also have we're in the process of launching. We have a broker-dealer, so we're going to launch stocks. We have a derivatives exchange, so we have an application right now in front of the CFTC to be able to do margin futures in the US, which will be like revolutionary, and just we're super excited and hope that goes through. So that's just a few things. But we also have a FTX Pay, which is a payments processor. So FTX US does a lot, and we're under the FTX umbrella, which is we also have an affiliate, which is a global international exchange. I have been at FTX for about 1 year and 2 months now. My career prior to this was mainly in TradFi, mainly at UBS, and then post-law school in the UK, moved to New York. Actually, I did 1 year here with UBS, and then various different roles in London and most recently Chicago in asset management. Came to crypto basically just because I saw it as the future of where the industry that I was in was going, and also wanted to be at the forefront of this cutting-edge space and bring have my true contribution to bring in equity to all.
Wonderful, thanks. And Rich?
Hi, Rich Booth. I'm Senior Director of Blockchain and Digital Asset Banking at Western Alliance Bank. We're the traditional bank that Jeff mentioned, $60 billion in size. We're located in Phoenix, Arizona, with branches in California, Nevada, and throughout the western U.S. And I bring, some experience to the space. I was the Deputy Chief Compliance Officer at UBS Bank, and prior to that, I was the High-Risk Compliance Officer at Signature Bank, and helped seat their digital asset banking team back in 2017. It's where we met Chainalysis.
Yeah,
been a long time. So I'm in a different role right now. I'm on the front line on the business development versus the compliance, but the compliance never really leaves the role. It's always embedded. And one of the things that I am very fortunate to have the opportunity to build another digital banking program at Western Alliance. It's rare that you get an institution that, from everybody from the board down to the CEO, CFO, COO, and so on, all the entire C-suite is on board and very enthused about adding some value to this space. So again, I'm fortunate to be here. Thank you, Jeff.
Perfect. Thank you all so much. So what I think is really unique about this is we have, perspective, traditional finance coming into crypto really coming into traditional finance, and like critical infrastructure being built to support, both sides of the aisle here. So I'd love to sort of get everyone's perspective from where you're coming from. Again, to kind of bring this back to custody and trust, like really if you could just describe the business for the audience, who are your customers and what are they really trusting you to do? Alfarida, would you mind just kicking us off with that?
So we serve both retail and institutional customers, so basically across the board. And effectively, they are, just from a custody perspective, they're trading on our platform and they are expecting us to, they say custody their assets, right? So, and we have various different volumes. So you have a retail customer who's maybe, spent $100 and is getting their feet wet and just buying their first bit of whatever coin it may be, let's call it Bitcoin, right? And then we have market makers trading millions every single day, right? So but equally across the board, we want to custody those assets and make sure they're safe, right?
And Rich, I mean, if you could draw on your experience too at Western Alliance, but also at Signature and UBS too, to what extent were those customers, who were the customers who were interested or are interested in digital assets? What did that look like for you, and what does it look like for you now at Western Alliance?
We're a commercial bank, as was SBNY, and we look at customers both. There's some retail aspect and the commercial, but we're seeing a lot of people that are crypto curious right now, and you have people, the individuals who are extremely savvy in the space, and other ones that want to get into the space, but they want to wade into the pool while holding on to the bank's handrail. And that's where we're trying to come into the mix. Is how do we provide the most value in this space as a traditional bank by engaging some of the amazing players that are out in this room today.
And Neil, I think one of the best things about Chainalysis events is that it does bring in people who are relatively new to this space. We have experts in the financial ecosystem, but they're just learning about who the real players are in the crypto space. So I do oftentimes hear, oh yeah, Fireblocks, they're a custodian. Neil, can you help us understand what the business is and who your clients are?
Yeah, no, for sure, and appreciate that segue, because I think when you look at custody in the traditional markets, it's significantly different from how you view digital assets. And so, like I said in the intro, Fireblocks is a technology provider, and we enable and allow our customers to direct custody or manage their own digital assets. And so when it comes to cryptocurrencies, digital assets, this concept of ownership or custody is focused around the private key. And so what we allow for is our customers to manage their own private key by leveraging our technology. And so what we're really doing at the end of the day is abstracting away the complexities of interacting directly with the blockchain, directly with the private keys, and essentially providing the technology solution for you then to build products and services on top of. And so when we look at the different market segments that we're servicing, the major market makers, the larger exchanges, OTC desks in the crypto space that have a high velocity, high volume business need the direct access and control to their own assets so that they're able to move those freely without having to rely on a third party to be able to manage those on their behalf. When we then look at a lot of these other fintechs and neobanks that are offering retail products and services, they need to allow the ability for their customers to instruct them to do what they want to do with their assets. So I think a really good example of this is one of our customers, Revolut, started out down the path of tapping into a third party to be able to manage their customers' assets. What they quickly saw was demand from their users to say, I want to purchase Bitcoin on the Revolut app, but then I want the ability to withdraw that to my Ledger account, to my FTX account, or somewhere else. And through those providers that they were leveraging, they weren't actually allowed to do that. You had to remain within that closed loop ecosystem that third party defined. And so the first use case that they brought on board with Fireblocks was the ability for their customers to provide a third party or external wallet address, the ability then to whitelist that within our platform and enable and allow their customers to freely move those assets wherever they wanted to. And the nice thing about it as well is that we have a number of partners and integrations like Chainalysis, where you can actually run through the transaction screening process fully integrated into Fireblocks. And so as your customers request to withdraw those assets, you go through the scoring, you then decide, yes, I'm comfortable to have these assets moved to this particular wallet, and you would then initiate that on-chain transaction. So this is really exciting from our perspective because, again, we've kind of grown up with the crypto native space. We're building functionality solutions to service them, which then are getting leveraged by more of the traditional space. So again, funds, asset managers, banks who are tapping into this functionality a couple of years later. But what I like to say is that we're future-proofing our tech stack for when that side of the house is really ready to dive in headfirst.
Now, everybody, I mean, the brands that you're all representing, the businesses you're representing are wildly different than they were even a few years ago. I'd love to sort of time travel back and think to, or maybe Rich, I mean, you mentioned even Signature and like working with us in 2017 and 2018. When you go back to that point in time, what were the primary challenges that you saw in setting up the business to get it where it is today?
It was basically, and it's still the same today, it's getting the compliance and risk components in place and seated first. You know, I look at it like, it's like building a house. You know, you had the foundation, you had the whole, you lay the foundation, and to me, the compliance aspect is really the foundation of any good entity, because you know, if you can board all these new clients in, but at some point they're going to rub up against compliance, and that's where the problems are going to start. So again, it's, you know, it's having a good adequate compliance department that's resilient, that's has the right talent on board, and the willingness to engage. Because if they're not there, everything else you do in the shop is going to you know, have problems down the road and problems for your clients. And that was my first stop at Western Alliance, was to get their, you know, spend time with their compliance department, get them in. This is what you're going to see. Because I don't want you going wobbly on us when we start bringing in clients that are outside of what you normally see. And, you know, there was a long conversation, you know, the risk assessments and everything on down, and having the monitoring system, having companies like Chainalysis on board as a partner. So it's a long, you know, and once you get that done, then the rest of the pieces will start falling into place.
Yeah, great.
And, you know, we look at things as you go through this ecosystem, you know, like custodian, everybody wants to do it. We think it's something that needs to be done. If you're gonna remain relevant in this space, you got to engage the entity. You got to engage the products. And, you know, we look at things, you know, do we buy it, do we build it, or do we partner with people? And, you know, I can't tell you what we're going to do, but I can tell you there's a lot of talented custodians in this space right now that, you know, I think you could get off the ground very quickly, you know, as a traditional bank.
I've got a suggestion for you there.
Yeah.
And Alfarida, I would imagine that the problem set that you walked into a year and change ago is radically different than what it is today. Can you just sort of like paint the picture of what that looked like when you were walking in?
So I think a year ago today, walking in, like, okay, it's crypto, one. I've been in TradFi the whole time, and like just basically FTX US was launched in 2020, right? And I joined in 2021. So we hadn't really done much. Like our growth this year has been, or just over the last time that I've been here, it's been pretty insane and phenomenal, quite frankly. But walking in day one, it was okay. What are we doing for things? And coming from a TradFi space where everything's pretty much legacy, and you're just kind of like looking at it and being like, how can I reinvent the wheel? How can I make improvements versus walking into this space and like, all right, what you have to write the policy that doesn't exist, like, and just trying to basically create that framework from scratch, but also leveraging the TradFi experience, but knowing it's crypto and it's completely different. And then also, I suppose, just there's been a lot of education, like for myself, but also like just educating the people that you're interacting with, because it's not TradFi. And even like when you are dealing with like different counterparties, they may send like let's call it a 20-page questionnaire that is tried and tested, but you're like, this doesn't really apply to our space, and trying to have those things. So I think the major like challenge has been like, one, setting up a compliance program, right, that is robust, right, and still in the process of doing that now, and because you can always make improvements, right? But then two, and that being at this space where we're kind of like maturing, but still like engaging with regulators, still getting licenses, and just making sure we have like, FTX US has definitely been like, and quite frankly, the whole FTX brand has been like definitely regulation forward and quite conservative. And that may have meant that like in terms of our different, like our competitors, maybe we have moved a little slower in certain spaces, but quite frankly, it's paying off, right? So definitely taking that like more cautious, conservative approach. Yeah.
And Neil, I would imagine that your outbound has probably changed a little bit over the last couple of years as well, with just people starting to understand what does it actually mean to have wallet infrastructure and having real institutions be amenable to it. So I'm curious what you've seen change over the last 2 years or a couple of years.
Yeah, I can even bring it back to my days at Ripple, 2017, going in to talk to banks. They said, if you mention XRP or crypto, we're going to kick you out of the office. Tell us about fiat and how you can make that more efficient. Great, all about it. Now those same banks are coming up to us and saying, hey, what do we do here? We're seeing a lot of demand, interest from our client base. What does this mean for us? How do we get involved? How do we enter into this ecosystem? And from my perspective, our team is really focused on helping to guide what this strategy and roadmap looks like. And so it can start out with something as simple as, hey, we want to offer buy, sell, hold to high net worth or institutional customers. What Bank of New York is doing with us, offering an institutional custody service for their clients who don't want to hold assets with a third-party custodian. They want to use their custodial bank who services them for everything else. We then have customers like a Cross River Bank who offers banking as a service, focuses very much on the fintech and crypto space, and now wants to extend those banking as a service offerings to crypto. I had mentioned Revolut and a number of these neobanks. I think that they're starting to bleed up into, I would say, the tier 1 and tier 2 banks. I think this fintech revolution we've seen over the past 5 or 6 years was really focused on the retail space, and they, I think, stole a lot of customers and wallet share from the traditional banks, and they're starting to move upstream now. And I think that that's where a lot of the larger traditional banks are starting to feel the pressure and really need to understand that. And so, again, it can be a buy, sell, hold. It can be some sort of yield product. What we're starting to see a lot now is around tokenization. And so what does that mean? It's taking a traditional asset and creating a digital representation of that and putting it on chain and managing it through wallet infrastructure. The simplest example of that is a stable coin. We won't get into Luna and algorithmic stable coins and all that fun stuff from the last couple of weeks, but having a bank issued stable coin that's backed by deposits sitting at an FDIC insured account is, I think, the best way to manage that particular aspect of the market. But we're also seeing loan portfolios, direct bond issuance, carbon credits that traditional institutions are looking to put on chain because it brings a lot more access, liquidity, and efficiencies to those markets. So again, we kind of service a wide breadth of use cases across really all market segments, and it's really kind of honing in on what are the first steps to get there, and then how do you want to grow and expand from there.
So Neil, on that, can you help the audience sort of understand what is the difference between like infrastructure-wise and tech-wise, traditional custody versus crypto custody, right? I try with family members to come up with a few different analogies, like a wallet versus a USB key, but I know from an institutional perspective, you probably have some good like differentiators you could point out to the audience.
Yeah, I guess somewhat analogous with like email as an example. When you log into your email, you're logging in with your password. It's all digital. Once you have access to your email account, you're then able to send and receive emails, access everything that's in there. In the digital space, in crypto and blockchain, it's the same concept, except instead of a password, you have a private key. And so having access and ownership of that private key is similar to having your password to your email. And so if you have access to that private key, you have full autonomy and control over the assets sitting within that particular wallet. So whether it's a natively digital asset like Bitcoin, ETH, et cetera, or a tokenized asset that is backed by something real and something physical like tokenized gold, a stable coin, a carbon credit, you then have now access to that digital representation and now the ability to move that asset wherever it needs to go.
Okay, that's helpful. And Alfarida, going back to what you were saying about sort of this cautious approach, being very proactive with regulators, has lent like tremendous success and tremendous scale. I'm curious, like, what do you think of, how do you continue to build on this trust that you've built with customers over the years? Like, what are you most excited about with all the growth that FTX has seen in the last couple of years?
So, as I mentioned earlier, we have our application in front of the CFTC now to be able to offer futures, margin futures in the US. That's one of the elements I'm like extremely excited about if we are successful. That, like I say, it will change the market. And because at this moment in time, 90% of the derivatives trading in cryptocurrencies offshore. So just to be able to bring some of that onshore it will be like revolutionary. And I'm like, if we are able to do that, that's an element that I'm super excited for. And then just also the model that we have proposed. Yeah, that's one thing I'm super excited about. And then also like even the vanilla stocks that we're going to be offering, like, because that will be like the opportunity for customers like to have like to be able to do crypto, and then also if you want to do vanilla stocks all in one place, have all your money in one place, right, and do it easily. So that it's just like simplifying things, and making it easy access. And I think for me, one of the reasons I came into crypto is about like that easy access and like helping the unbanked and future, like that is not necessarily the one piece, but like holistically what FTX is doing globally and in the US is going to like serve to like close those gaps and create better access.
I'm so glad to hear it, because I think it's often the case that people sort of, the onus is on the E-Trades and the Charles Schwabs of the world to integrate crypto, and you have FTX here who's saying, well, we've got the crypto world, like we're going to take the TradFi, we're going to do the stocks, we're going to do everything, the vanilla stuff, the complicated stuff on our own, as a means of like achieving the inclusion and
exactly. And that is exactly what we are hoping to do, is to create that financial inclusion. And that is for me like paramount to like everything that I personally do anyway, and also to like Sam's Sam's whole ethos is effective altruism, as many people are aware. So just like knowing that like we are being so innovative in the space and creating great change, but also it's going to have a positive impact.
Yeah, and I think I just kind of want to echo that as well. We look at the market today and everybody chasing yields in DeFi, buying the dip on Bitcoin, saying, I want to make a quick buck. I think the underlying concepts and technology behind this, which is blockchain, is truly revolutionary. And I think we do need to sort of delineate between crypto and what blockchain actually is. And blockchain is all about financial inclusion, accessibility for the under and unbanked, because right now, if I'm somewhere in Latin America and it's difficult for me to get access to a brokerage account or even open up a bank account, if I have a digital or a crypto wallet, I have now full access and control. this concept of DeFi and earning 1,000% yields is great for some people, but at the end of the day, this concept of DeFi and having accessibility to a decentralized network and platform where you can now face off with someone directly, and rather than having a centralized counterparty own and coordinate everything themselves, you're now relying on technology and code to be able to govern the network. And I think that is what is truly revolutionary, and I think a lot of people do lose sight of what this actually is with all the noise in the market.
I got to show some love for the traditional finance in the room here. but honestly, you know, it's funny because I think, again, I mean, the work that you were doing at Signature, this was so long ago in crypto years, right? I mean, you were really one of the first institutions to even begin to consider banking services with cryptocurrency businesses, period, right? So, you know, credit to where it's due. I guess, Rich, can you help from the traditional banking perspective, help people understand how have you seen the relationships with custodians and cryptocurrency businesses change over the years? I often hear people talk about sub-custody or, you know, trying to work with exchanges for liquidity, but like, how have you seen that change? How do you think about that relationship between a typical bank and a crypto custodian?
Yeah, you know, it's funny, the traditional banks, you know, again, going back many years ago, it's, you know, where do they want to, they have to define where they want to participate and where they want to add value in this space. And, you know, I look at the banks today, you know, as a traditional bank, and I explain this to my team back in Phoenix, is that, you know, we're going to provide a variety of services to this space. You know, what do we do well? Well, we provide the on and off ramps for fiat. We can do services. You know, that's where we need to exploit our strengths. I mean, there's a lot of things that, you know, we want to do. We want to do liquidity. We want to do this. But you got to define your mission, and you got to, you know, stay in that swim lane until you get it developed. And part of that, going back, is the comment that was made before about you got to have the ability to communicate that effectively to your inner people in the institution. We do a boot camp at, you know, several times a month just to educate people the difference between blockchain and Bitcoin, because there's a lot of people that don't know the difference between that, and it's not just, you know, people, you know, it's at all stratas of the bank. So, you know, the education component internally, there's the education component externally. It's the regulator component. You know, it's getting them comfortable with what you're doing. You know, we're a San Francisco FRB's, you know, Arizona State chartered, and you know, we bring that message to them, both from the compliance and risk, but also from the business aspect, because they want to hear, you know, what are you engaging in? So, I really think that, you know, define the mission, provide value to the industry, and everything will fall into place.
Great. Neil, you had mentioned. You were talking a little bit about, I think, some of these other use cases that are coming up in the space, right? We're not talking about just Bitcoin, just ETH, or anything like that. I guess how is Fireblocks approaching different market segments in this space, like Web3, NFTs, DeFi? Like, how is that different from the traditional crypto perspective, I guess, if there's such a thing?
Yeah, it is funny that we're talking about traditional crypto after a couple of years, but that is what it is. I mean, I look at what you see exchanges, market makers doing, is that they're providing liquidity to users, whether those users are institutional or retail. That's essentially the main premise or purpose for those entities to exist. We then kind of see how that's evolved into the NFT space. I think NFTs are really unique in what they will or can ultimately provide. If you look at something as simple as ownership of content of a creator. If I create a piece of art, if I create anything, I can now tag that or tap into the concept of an NFT. And again, going back to what is technology and code defining here, I can, within that NFT, code a royalty stream. So now every time that piece, that content is exchanged between two parties, bought, sold, I can now get that royalty directly to my crypto wallet. when we look at this concept of DeFi and Web3 and gaming, it's kind of taking social media and putting it on steroids in the sense that now I can interact and retain ownership of my content, my money, and anything associated with my digital identity directly, and can now use it on different platforms. And so, again, I think it is very conceptual right now for a lot of folks who maybe grew up in the TradFi space, but there's a lot of innovation being done. And from a Fireblocks perspective, actually earlier this week, we announced support for Web3. And so we're basically creating how we created an infrastructure and wallet technology to build on top of. We're now parlaying that into infrastructure for Web3 and gaming companies to ultimately build on top of. So like I said earlier, kind of future-proofing this platform for the TradFi world, I think we're probably 5 to 10 years ahead of where they'll be. But I think a great opportunity to kind of really assess what is your institution looking to do today, what do you want to start with, but ultimately, what is the longer-term vision and strategy, and how do you see yourselves kind of existing in this potential new world? I'm not saying it is coming, but I think that everyone does need to be prepared.
So,
Sorry, yeah, just I wanted to add, you mentioned gaming, and FTX, we actually bought a gaming company. So basically we're looking at things in ways that we can empower blockchain with gaming and have that, have how that segues in. So there's a lot of exciting things to come, so yeah.
I was just about to say, it feels a little bit like this is hopefully one of the things that, Rich, you were saying, like when you decide to build or buy, that this is the infrastructure is something that a traditional financial institution would get comfortable with buying, right? So I guess, Rich, when you think through the decision-making process, now that all of these technologies exist for banks to take them in or to buy them and to integrate, right? Like, do you have any sense as to what is the tripping point for a bank to get into custody, or does it make more sense for banks to do sub-custody? Does it have to do with the size of the bank, or sort of how do you perceive the moment in time at which a bank should actually say, let's do custody ourselves versus work with other custodians?
That's a loaded question. Thanks, Jeff.
I'll jump in and say
you've done so well with it at everywhere you've been. So.
Well, again, I'm going to put on my compliance hat again. One of the things that, regardless of whether it's the custody, and obviously there's a tremendous risk and compliance component in that. And then you have to take that and you have to be able to articulate what you're doing in that space to your regulator and how you're protecting your customers. Again, we've got a very simple mission at the bank, and number one is to protect the depositor's money. I think there's, again, getting back to my earlier comment, there's a lot of great, talented firms that do custodian very well. And they've been vetted. They have the regulatory chops to engage, and to integrate a bank into that is the way to integrate a bank into an existing platform of that nature. I think is probably the preferable way to go, unless you have an institution that has a tremendous risk appetite, that the matching technology that goes along with that. I think you're better off, partnering up.
I mean, it feels to me very much like this. The decision is, do you want to manage and due diligence counterparties, institutional counterparties, or do you want to take on a new process? Like, and do you have the people to do that at a bank?
Exactly,
right?
and that's the $1 million for any institution. It's it's the counterparty risk that you have to manage and have to be able to explain day in and day out, 24/7, 365. So it's a tremendous task, a tremendous risk for a bank.
I mean, I'm no longer in the TradFi space, but I do think in terms of build versus buy or partner, I think long term you have to build, and I think that's how you're gonna survive if you are in the TradFi space. So now you need to be getting the right people that have the expertise, or start training people up, and even if you are having people partner to some extent, or maybe they're short-term partnerships to get the people that you currently have in-house, get them used to this, and just basically build that expertise and knowledge base in-house so that you can manage this long term. But I think, and this is my own personal opinion, I just think it might be a little short-sighted to just be like, oh, we're just going to buy something, I think it may be short-sighted if you're not like thinking like this in a like longer term, like a long-term strategy versus just short-term.
Yeah, and that's exactly why I'd said really understanding where you see your institution fitting in the next 5 to 10 years is critical, because you don't want to make a decision today that you're ultimately going to need to pivot, re-platform, reintegrate in 6, 8, 12 months from now. I think we've seen the speed at which this market moves and this ecosystem moves, and it's unlike anything I've ever seen. And so just making that conscious decision to really understand what are the long-term goals of the company, and where and how can you partner, build, buy, partner in this space is going to be critical. And going back to sort of the evaluation of what do I want to outsource this? Do I want to bring it in-house? I think that the counterparty risk element is very important. If you're a large financial institution, do you want to be offloading counterparty risk and potentially a significant amount of capital to someone who has a balance sheet the fraction the size that you do? And so I think that, and kind of in tandem with, okay, well, what do my regulators think? What do they say about these particular use cases is critical. And the first thing I do, the second thing I do after talking through kind of here's the opportunities, the use cases, is to say, have you engaged with your risk and compliance team? Do you have an open line of communication with your regulators? Because any of the banks that we work with globally are working hand in hand with their regulators to help them understand what is this product or service that I'm looking to deliver to market? How am I remaining compliant? How am I putting the controls and processes in place within my digital asset platform to ensure that I'm mitigating the risk and ensuring that my customers' funds are truly being kept safe? And then at the end of the day, getting that letter, whether it's a letter of no action, the OCC, FDIC, Fed, whoever the 1,000 regulators are here in the U.S., ensuring that they are sort of reviewing and approving what it is you're looking to do is critical. And I think that's sort of irrespective of the custody solution that you choose.
Well, in the spirit of, really taking this time to build and educate and scale, I'd be curious if you could all wave a magic wand, what would make your lives easier? What do you think industry-wise or even culture-wise in crypto is missing that would grow the crypto custodial or the ecosystem in a healthy way?
Regulation. I think it's as simple as that. I think there's a lot of gray areas, a lot of misunderstanding right now. I think we're seeing not necessarily a fight between regulators, but I think confusion between regulators. Is it the SEC? Is it the CFTC? What are the guardrails that we have? What are the parameters that define a digital asset as something versus something else? Is it a security? Is it a currency? Is it a commodity? Is it a just brand new asset class that now needs to be regulated in a different way? And I think until we get that, we're going to kind of be lacking full-scale adoption of this technology.
Yeah, I completely agree, and think we need that regulatory clarity.
And clear-cut regulations, we don't want gray,
I think one great example of that is I don't know if anyone saw the SEC accounting ruling from a couple of weeks ago, 121 I think it was, where it's just saying that now assets being held on behalf of customers need to be put on balance sheet. And there was a lot of ambiguity in that announcement that banks have now come to us and said, how are you interpreting this? And we do have direct lines of communication with the SEC and regulators here. I grabbed coffee with Hester Purse on Monday, and she said, please consolidate the feedback that you're getting from your customers so that we can bring this internally and actually shape regulatory guidance in a way that's meaningful and that actually gives direct answers. Because even though there are things being released, even though there are comments being made out there, I think it's just causing more confusion and more harm than good at this point. Sorry if there's any regulators in the room.
Well, listen, I think wrapping up, I would love to just ask finally, for those who are in the room who are excited and engaged and want to get into the crypto space, or for those who are perhaps working at a traditional financial institution and they want to be as encouraging as possible of getting their institution into crypto, would you offer any advice to anybody who might be in those seats?
Let me answer that, Jeff?
I mean, go for it. This can be an easy, simple plug to just come work for all of your companies, but up to you.
It's you got to educate one on the space, and two, you need to have the backbone to get the pushback. Again, back in the day when 5-6 years ago. We're boarding a digital asset team. It was a yeoman's task. I mean, there was a lot of naysayers that just felt that it was, and just smiling in the audience, that this was not a real industry. It was completely, fake. And it was like, no, the compliance teams really stepped up to the plate, put a fence around it, and built a program and scaled it. And that's the key. That's really the key thing. So it's the education, having the backbone and the resiliency to deal with the problems that are going to come down the road, and being able to communicate that to your clients that, we're going to see stuff that we have not normally seen, but we're not going to throw you out. We're not going to go wobbly. We're going to help you get to where you need to go. And that's the key. That's the key. I mean, again, sharing what entities, whether it's an exchange or whether it's a market maker, they bring a lot of brilliance to this industry, but they may be lacking in some of the compliance aspects, and that's where the banks can say, we'll share the framework with them. This is what you should be looking at. If you get a compliance program and it's, it's on one page and there's a coffee stain on the bottom of it, you may have to.
Who are you dealing with?
Take a step back, and
because we're not using paper over here.
Yeah, well, that's a whole different conversation. Well, you know where I'm going with this, and it's you got to help. You got to be willing to help out, and that's where becoming a trusted partner with your business entity, and it's that back and forth between the business line and compliance. And I've been fortunate now to sit on both sides of that table.
Yeah, and I think to add on to that as well, where we do see successful implementations is when there's a committee put together that is cross-functional. So it's not just compliance, it's not just risk in the business, it's technology, it's InfoSec, to really understand the broader implications of this for the business. And so I think you look at the top 50 banks in AUM in the US, we're engaged with all of them in some capacity. And it's really interesting to see that the ones that actually do drive forward are the ones that have an executive owner or sponsor of it and are engaged cross-functionally in having those key considerations for how this impacts business-wise, operational-wise, technology-wise is critical. And I think one of the simplest things to do is also, hey, let's look at the ACH and wire reports and how much money is going out of the bank to crypto exchanges. Where are we losing wallet share today because we don't offer this product or service that our customers are asking for? And I think that's a good spot to start. If you have, if you can point to a specific problem statement at the bank, that will be critical in driving things forward.
I'd echo that, and I'd echo both of the points that you've both made in terms of education. But I think like a lot of you guys are in the room, and this is like a crypto talk, so like you're already like in a different place from a lot of people if you are in TradFi. So like I would say grace too, like grace in terms of the education you're giving, because you may be 10 steps ahead of a lot of people in your generally large firms. And also like maybe just starting from the basics if you are in TradFi, not assuming everyone knows what is a blockchain, what is a crypto, even though it's in the news and stuff like that. Like there's a lot of people that don't know. So just being like giving grace and taking a step back and being like willing to have that tenacity, because there is going to be a lot of pushback, but then also being gracious enough to explain to someone like exactly what it is. And for those cross-functional, because you're going to have someone in that room that's like, what the hell am I really doing here? So yeah.
You might have to repeat yourself more than once.
One more person you want to add that invite list is the audit folks as well. And, I always bring the audit and legal with me on any of the journeys, because at some point audit's going to come in and start looking at it, and it's a lot easier to have audit as part of the entire ecosystem, whatever you're doing, and then have the exam later on down the road, and you'll save a lot of headaches.
And that's when the real party starts.
Yes.
When audit gets.
Well, listen, thank you three so much for joining us. I and a few of us are, at least a few of our guests are able to hang out and mingle if anybody has questions, but otherwise, thank you everybody in the room for joining us, and thank you to our panelists.
Thank you.